Good day traders, Richard Jacobs here, and welcome to the Underdog Weekly Perspectives Report, where we reflect on some of what's been happening in the market over the past week and also form some views and perspectives on what we think the market's going to be doing over the coming days and potentially weeks. I'm going to work my way, start off in a slightly different angle for tonight's video, for this week's video, and actually go all the way back on our charts. And what I have up here is actually a weekly chart of the top 40. So each candlestick represents 1 week of trading action. And as you can see here, where I'm going all the way back to that's where we now, December 2013. And the reason I'm doing that is, over the past week or couple of weeks, one of the questions that I've gotten a lot is around this idea of falling volatility in the markets over the past 6 months, over the past year. And what does that actually mean, or how does that actually, can you actually see that on the charts? And certainly you can, because if I go back to, and I'm going to zoom out completely over here, and let's go back to even around about 2012. Let's go back to 2012 and we look at, you can see there's a clear uptrend over here as the market pushes all the way up here into this sort of mid 2014 level over here. And then what happens is you get the market putting in a retracement, continues to the upside, doesn't quite follow through, puts in this double bottom, pushes up, puts in a higher high. So yes, we're still in a nice uptrend at the moment. Got a bit choppy over there towards the end of or the last quarter of 2015, but certainly followed through. We had that Christmas rally at the end of 2015 which pushed through. Then we got a massive retracement all the way back down where we almost revisited this previous lows over here. And then the market continued to the upside and we put in a higher high. So in other words, we pushed through those highs over there, but we didn't really close above those highs on a weekly basis. If you can just eyeball that over there, you can see the market pushed up, tapped that high water mark, and then almost found resistance over there and pushed to the downside and retraced all the way back down, almost back down to this previous low over here. So what we found ourselves in was what we would classify as a range bound market, and you can actually see it quite clearly here. The market's basically bounced around, and since then it hasn't actually broke either of those two levels. It's really just bounced around inside of that high and this low. Let's put that low there, this low over here, not really breaking out or not even tapping those levels at all. And this has really been where we've seen the lack of or drop off in volatility. Markets really just been chopping along sideways. It hasn't even had the range. I've said it's range bound between these two levels, probably around about the 49,000, just over 49,000, and the 41,000 levels, about 8,000 points. But even there, we haven't really seen it even move to the extremes of these levels. Instead, we've had this choppy trading action where it really hasn't put in higher highs or higher lows. We've seen the starts of potentially trends on shorter term time frames where the market's pushed down to the downside, but then rallied up and then broken structure to the upside, but all the while inside of this trading range. And it's really these, this last year, call it year, even year and a half, where we've seen a steady decline in volatility coming through in our market, manifesting in this choppy trading action which we're seeing at the moment, or looking at the moment on these weekly charts. What is interesting, however, is this last few weeks worth of trading action. That's really one of the reasons I wanted to highlight this to you guys. What we've seen is we've actually seen the break for the first time, a break and close above these previous highs over here. And that's we've broken a level set in, when was that, November 2015, and previously in May 2015. So we've seen the market actually break out of this range for the first time in quite a few quite a few years. And that perhaps is, it could be relevant in that it could be indicative of, potentially ranges starting to open up in terms of the overall top 40 as we move towards the end of the year. And one of the things you'll remember or recall that I've been speaking about is really post these summer months, we're really looking, the markets hit very low volatility levels, and we're really looking for ranges to start opening up. And seasonally, if there is an opportunity for ranges to start opening up on a seasonal basis, it's post the northern hemisphere summer months, post our winter months, as people return from holiday in the northern hemisphere in the states specifically. So what we're seeing over the past couple of weeks, as we came into the end of August and now as we move into September, we actually saw this break of structure on the weekly chart as the market's pushing up to the upside. So that's just something I wanted to highlight to you guys in the sense of illustrating what the price actions look like in this low volatility period over on a higher time frame, on a weekly as opposed to the daily time frame that we generally look at, and also to illustrate the point that we are seeing a potential, while we are seeing a break of structure to the upside over here, and that does open the door for that potential improvement or enhancement in the volatility levels that we're currently seeing on our markets. If we look at that through our more traditional daily lens, you'll see that break to the upside is really manifested off the back of this last leg of the move to the upside over here, which we've been watching over the past few weeks. It's it's pushed up really hard from mid-June, so that's 2.5 months, virtually straight to the upside over here, with very little in the way of retracement to stop this run to the upside over here. So what are we seeing now at the moment? Well, the past weeks, again, it's been fairly choppy. We haven't seen the retracement playing out yet, the one that we've been waiting for. Market did put in a lower close, lower low here on the 29th of August, but since then it hasn't been able to violate those lows, so we're still waiting for that. The past 3 days, we've had bearish candles, bullish candles. Friday was really not much of a muchness in terms of trading activity, not much range in it at all. So it's been chopping sideways the past week or so, and we're really waiting for something to happen over here. We're waiting for either the market to put in a higher high, which would require to push through that 50,100 level, or for it to retrace and come in under this this low over here, which would to us mark the start, or potentially the start. Let's put it that way. It would be the first indication that we could see the start of the retracement playing out here would be a move below the 49,500 level or thereabouts. Stochastic isn't doing much at the moment. It rolled down to the downside. We saw the shallow retracement playing out here of some negative divergence, but this bullish trading action on Thursday, and then this really a nothing candle here on Friday, has seen the markets, or has seen the stochastic sort of bounce a bit here in the middle of its range. So nothing much to read in terms of what's happening over there. So really what we're looking for at the moment is, I suppose, in a sense, we have a bit of bias to the downside over here, because we are expecting this retracement to start playing out. But one of the things I've highlighted to especially to our daily subscribers is that it's quite dangerous to form these views, and have these biases, because really, if you look at the trading action here towards the middle of August, we had the market that had run up so hard. We saw one candle with a lower close. We saw another candle with a lower low, and we expected the market to start a deeper retracement. Instead, it just consolidated sideways and then pushed to the upside again. And that's why we've reiterated the point over and over again that it's important not to try and preempt things over here. Yes, you can have a bias, you can have an expectation, but don't get married to it. Here we've got a lower close here on the 29th of August. Let's wait for another lower low. Let's wait for a further lower low. And if we get that, then that would really be indicative of the start of this retracement playing out. Now, going into the new week, things are quite interesting well, interesting is probably not the right word to use. We've had a lot of news flow in terms of what's happening on the state side, the interaction with North Korea, etc. And even though you can't see it reflected over here, it's not reflected in the price structure yet. There is the expectation that we are going to see a bit of a pullback in the start of the new trading week. Just based on I'm just going to have a look at some of the Sunday indices on IG markets. We've got, the FTSE down about 0.6%. You've got let's have a look at Germany. These are all the Sunday indices, down about 0.7%, and Wall Street down about 0.5%. So indications at this stage are that we're going to start the trading week a bit on the back foot, and we will probably see some kind of a move to the downside. The extent of that is what we've got to look for. As I said, if we can see a push below the 49,500 level, the market closed just shy of the 50,000 level, so that's still a good 500 points to the downside. But if we do see that push to the downside, then certainly that would be step one in terms of confirming a potential retracement playing out. So that's why I started off by saying that we do have a bit of downside bias at the moment, but it's important for us to wait and see if that plays out. Now, you can certainly, that there will certainly be opportunities for trading these kinds of moves on a shorter time frames. But for the purposes of this weekly analysis, we're obviously looking at a weekly charts, we're looking at the daily charts. So we're taking a sort of higher level perspective on where we think and what we think the market's going to be doing. And in that sense, it's important for us to wait for that retracement to start confirming before getting married to a view that we are going to see some kind of a deeper retracement. If we do, and this is the big if, where would we expect the market to retrace to? Importantly, again, it's something that we've been highlighting, is this is an uptrend. What we're looking at, even if the market does push down here, it is a retracement within this uptrend. And if we look left, the most logical level for this market to retrace to would be probably in this zone over here, around about this previous price structure and this previous price structure support over there. So you're probably looking for something in the region of that 48,500. Which in the context of this push to the upside is actually quite a shallow retracement, but that would be the first kinds of levels that one would expect the market to move to were it to retrace. I took a Fibonacci and put it on there. You can see it's quite shallow. We're barely even tapping into the 38.2, so maybe we can even widen that and say anything really in that zone down towards the 38.2. So between the 48,500 and the 48,000 would probably be where we would expect the market to retrace to if we did see the retracement starting out. So that's just something to bear in mind at this stage, and to keep an eye on as we move into the new week. Volatility wise, I said Friday was a bit of a nothing day, and that's pretty much manifested in this rather dismal looking normalized ATR coming in at 9.51, one of the lowest ones we've had in the past, I think since since the end of May. So bit of a drop off over here, not great, and we're really looking for the market to try and pick things up again, for ranges to start opening up, and that's what we want. One of the things we've been doing personally in our trading room is over the past month we've really cut down on our position sizes, specifically as a result of this lack of volatility. And ideally what we want to be doing is we're going to be keeping an eye on those volatility levels. We're going to be keeping an eye on the intraday ranges, and probably towards sort of middle to late September we want to be opening up our position sizes a bit more, trying to take advantage of range expansions and increases in volatility levels, especially as we go into October, November, December. That last quarter is quite important for us to try and take as much advantage of possible of trends that are developing in the market, and that is something that we actively looking at and monitoring to see how and where we can take advantage of those potential range expansions. So that's what we're seeing on our top 40 at the moment. If I switch over to the international markets, let's have a look at what's happening over there. Kicking off with the Hong Kong daily, trend remains well to the upside over here. Market continues to push up, putting in higher highs, higher closes at the moment. So this is, I've made the point before, this is one of the strongest markets, strongest global markets at the moment, and it's done so on nice some decent range as well. So all bullish over there. If we look over at the US, the S&P, markets pushed to the upside, put in a higher high, complex retracement to the downside, and now we're experiencing some follow through to the upside over here. It's not being clean trading action. Complex retracements like this are never clean in terms of trading action, because generally what happens is, you get a push to the upside, market retracements, you look for an opportunity to get long, you get long, there's no follow through, instead the market just rolls to the downside again over here. Which, depending on your trading system, your trading strategies, could or could not stop you out. Obviously, if you're willing to take, play bigger stop ranges and put stops below previous structure lows over here, then you're still fine. But if you try to take it off these swing lows, then you'd be stopped out, and you have to look for other trading opportunities. And these complex retracements, they offer additional opportunities to get long. For example, if you'd stuck either with a trade with a bigger stop loss, or you are willing to re-enter trades, if you had this move to the downside that stopped you out, you'd be looking for opportunities to get long again. And in fact, you'd probably be long in this trade at the moment as it pushed to the upside towards these previous structure highs over here. At the moment, if you look at where it is, I mean, we pushed quite hard to the upside of the past week. We've pretty much tapped in. If I was long in this market over here, I'd probably have taken profits around about these higher closes over here, and be sitting on my hands really in terms of a position on the S&P, because what you want to be watching now is for the potential break to the upside around through this 2490 level. You want the market to break and close above this if you're a bull, but it's probably quite overbought in the short term at the moment. So another retracement here even wouldn't be surprising as we head into the new week, especially in the context of what I said earlier, looking at some of the news flows that have come through over the weekend. It really wouldn't surprise me to see some additional consolidation or some new consolidation playing out over here, and just goes to highlight how choppy even the US market, which has been in a phenomenal run since the end of last year, really. Even a market as strong as that does experience some choppiness, perhaps indicative of some the market potentially reaching some kind of a top over here. Again, not trying to be preemptive in terms of that, but that's just the kind of thinking you want to have in your mind as you're analyzing these markets. If I look over at the UK, the FTSE, that's the messy one, as I like to call it, where we've had the market push to the upside, put in the complex retracement, find support, continue the upside, come back, find support, second time, continue the upside, come down, third time, fourth time, and now it's pushing to the upside again. Messy market. Personally, I wouldn't touch it with a 10-foot pole in terms of this daily time frame at least. I'd be pretty much standing aside and waiting to see this market can actually just break through and out of this range over here. It's quite a wide range though. It's 300 points that we're talking about here, but there's just not enough trend. I wouldn't say no trend, but there's certainly just not enough trend for us to work with over here. One could, for example, do something like, say, use a potential double bottom, but it's not a great looking thing. If it does, let's just have a look. Yeah, it's probably just about closed above there to trigger the double bottom. If we do see a follow through, we expect the market to push towards these highs over here. So technically that's probably the expectation, but again, bear in mind what I said earlier in terms of just looking at the Sunday markets. We're looking at about 0.5%, 0.7% off on the FTSE as we stand at the moment. So do expect some kind of consolidation retracement playing out over there. Looking at the DAX, the DAX has got this pushing lower lows, got this retracement playing out. Again, one of those markets where the expectation now is that we see some kind of continuation move to the downside playing out. The market, I highlighted, I think in our daily subscribers, we had this push to the downside over here, but the market didn't put in a lower close, it put in a lower low. So technically we got that lower low, but we really wanted, if you were bearish and trend trading this market, you really wanted to close below this previous low over here, and that's really what the trend traders will be looking for on the especially on the short side, is for a push below that 11,900 level and a close below that 11,900 level specifically. But overall, this is quite a bearish looking, so relatively bearish looking structure that we have in play on the DAX. What else we're going to look at? Let's have a look at gold. Gold pushing to the upside over here. I'd expect further upside, just based again on the news flows. I'd expect this upside to continue over here. Gold's looking quite bullish on this breakout over here. Not much more to say on that front. And let's look at the rand dollar just to close out things. Rand dollars, we've had that move to the upside, the retracement continuation, didn't quite revisit these previous highs over here. Market instead saw the rand strengthening to the downside, bit of range bound. I think I highlighted to our daily subscribers as well, we're a bit range bound on what's happening over here. So we'd be essentially watching this 1290 to 1280 level on the downside, as well as this 1350, 1360 level on the upside, and we want the market to move outside of that range to try and get some kind of a directional bias over there. And obviously, a directional bias in terms of the rand dollar exchange rate is quite influential in terms of our own local top 40. So that's certainly something to keep an eye on as we go into the new week. So that's pretty much what we're seeing on our price structure lens at the moment. Things remain quite choppy, as I said. We sort of a bit biased to the downside, looking for that retracement to start playing out. And one of the factors, as I just mentioned now, is certainly going to be the exchange rate. If you see some of the international markets coming off, if you see the the dollar weakening against some of the emerging market currencies specifically, that will certainly add to the case for that retracement playing out. But again, bear in mind that all of this is counter trend. Global markets, local markets, they are all, with the exception of something like the DAX maybe, for the most part, they are trending to the upside. So when we do see a retracement, bear in mind that it is a retracement within a bullish trend. So guys, that's pretty much it from our side. I do wish all of you the best for the trading week ahead. As always, if you have any questions, feel free to drop me a line, Richard at underdoginvestments.co.za, or pop over to our website, have a look at some of the services we provide. If you're interested in signing up for our daily trade signals report, please feel free to drop me a line and I can show you how to go about doing that. And all the best for the trading week ahead, and I shall chat to you next week. Cheers.